Hey guys, what's up? Alec back with the daily stock market, and look at that. We see Netflix down after hours 2.5% after they just released a beat on subscribers and a beat on EPS. They've been growing their subscribers by a significant amount. So in this video, we're going to be going over all the details. It is going to be a short video, so make sure you make it all the way to the end because there's going to be a tons of valuable information. And we're also going to go over if Netflix is a good stock to buy at the current price of $595 per share, or if we expect another downward movement and where to be prepared for the downward movement. So with that being said, just smash a thumbs up on this video if you learn anything throughout this video. Subscribe on YouTube with post notifications. Share this video with a friend, and let's dive right into it. Now, pulling out to the last 12 months, we can see that Netflix is on an absolute tear. It's up 77% in the last 12 months. So it would have been a fantastic investment this time last year at $323 per share. But the question of the video is at $600, $595 per share, is Netflix still a good buy today? Now we can see the stock price is extremely volatile right now, and we're going to go over that in a second. What's going on, why the stock price is moving. But the first thing that we notice is as we scroll down, we can see that they have a 51 PE ratio with a $264 billion market cap. So they're an extremely large company. We can see the trading trends on Robinhood. Lots of calls were going on right before leading up to earnings. And we can see the official EPS is a beat. The expected was $4.52 and came in at $5.28, which is a nice beat. And they're more profitable now than ever with a $5.28 EPS. Holy cow. Now, if we continue to dive a little bit deeper into Netflix, some bullish things we can see surrounding Netflix has significant room to grow in international markets where it's already shown promise with local content, which we all probably are aware of, with all the international content that Netflix has been releasing. Ad-based subscriptions will open Netflix to a new base of subscribers and potentially substantial new source of revenue. And Netflix has already created many hit shows that are exclusively available on its platforms. And obviously, we don't need to go over the bullish things about Netflix. It's a great company, has a competitive, durable advantage. If you were to get rid of all your streaming platforms and you only had to keep one, HBO, Hulu, Disney Plus, Paramount Plus, Peacock, or Netflix, chances are majority of the people are going to choose to keep Netflix. And if we dive into what's going on with Netflix right now, get a deeper look into their earnings specifically, we can see Netflix report strong subscriber gains, but Q2 revenue forecasts disappoint. Okay, so the revenue is the real disappointment here, while the EPS and the subscriber growth is very nice. Netflix reported its first quarter earnings that beat across the board on Thursday, with another 9 million plus subscribers added just in the quarter alone. However, disappointing second quarter revenue guidance dragged the stock lower in after-hours trading. New subscriber additions of 9.3 million beat expectations of only 4.8 million. They almost doubled it, and follow the 13 million net additions the streamer added in the fourth quarter. The company has added 1.7 million paying users in Q1 2023. Notably, the company said it will stop reporting quarterly membership numbers starting next year, along with average revenue per member, or ARM. As we evolved our pricing plans from a single membership to a multi-tier subscription with different price points depending on each country, each incremental paid membership has a very different business impact, the company said. Revenue beat Bloomberg's consensus estimates of $9.27 billion to hit $9.37 billion in the quarter, an increase of 14.8% compared to the same period last year. As the streamer leaned on revenue initiatives like its crackdown on password sharing and ad-supported tier, in addition to the recent price hikes on certain subscription plans, Netflix guided to second quarter revenue of $9.49 billion, a miss compared to the consensus of $9.51 billion. So very, very slight miss. if the company Netflix drops a lot in the share price, then it's definitely an overreaction in the market because it missed slightly on revenue and it beat significantly, almost doubling the projected new subscribers for the quarter. Netflix stock has been on a tear in recent months, with shares currently trading near the high end of a 52-week range. Wall Street analysts have warned how high expectations heading into the print could serve as an inherent risk to the stock's price. Basically, they were saying that the stock is a little overinflated right now, and if numbers fall flat and they don't live up to the expectations, then the stock price can come back down to reality, closer to $550 per share. Okay, earnings per share, EPS, beat estimates in the quarter, with the company reporting EPS of $5.28, well above the consensus expectations of $4.52, and nearly double the $2.88 EPS figure it reported in the year ago period. Netflix guided to a second quarter EPS of $4.68, ahead of the consensus call of $4.54. So they are expecting to not be as profitable next quarter, okay? Profitability metrics also came in strong, with operating margins sitting at 28.1% for the first quarter compared to 21% in the same period last year. The company's previously guided for full year 2024 operating margins of 24% after the metric grew to 21% from 18% in 2023. Netflix expects margins to tick down slowly in Q2 to 26.6%. Free cash flow came in at $2.14 billion in the quarter, above consensus calls of $1.9 billion. Meanwhile, ARM ticked up 1% year over year. On the ad fronts, ad tier membership increased 65% quarter over quarter, which is a good sign, after rising nearly 70% sequentially in Q3 2023 and Q4 2023. Okay, to note, monthly active users, otherwise known as MAUs, are not the same as paying subscribers. The company has yet to reveal actual subscriber figures for the ad tier or how much revenue it generated so far. So that is very interesting, because why wouldn't they want to release how much, revenue they made from this new subscription tier, especially if they're doing very well? They'd probably want to brag about that to their shareholders. Okay, so something to think about. And if we look at what analysts have to say about the stock, they're somewhat bearish on Netflix overall in the next 12 months. We have them at $611 per share before they reported earnings. Now they're trading closer to $600 per share. And on average, we have the analysts saying around $639 per share in the next 12 months is what you can expect. High end, $765, but the risk is as low as $440 per share. And as we scroll down, we can see where some of these analysts are coming from. The first five-star analyst, Mark, we see $490 per share, just reiterated 2 days ago. The next five-star analyst, Brian, we could see a $713 price target. And after that, we have a lot of 4 and 5-star analysts with above $650 price targets to $700 price targets. And these were all just reiterated in the last week. We also have a top 25 analyst, Mark, with a $640 price target in the next 12 months. And we can see that his success rate is over 60%. So he's a very accurate analyst. We also have a Morgan Stanley analyst ranked 295 out of thousands and thousands and thousands of analysts with a $700 price target in the next 12 months. So overall, I don't personally like to buy stocks at 52-week highs. I like to wait for a dip down as close to a 52-week low as possible. In my opinion, anything under $500 I think is a good entry into Netflix stock, because there is a good chance that it's going to be trading again at $650 per share. So if we're able to buy in at $500 per share and able to sell at $650 per share, which is extremely realistic, that's a 30% gain in less than 12 months, which is called beating the market. And if you're able to buy Netflix under $500 per share and get your average cost closer to $450 per share, which there is a possibility Netflix stock can go to $450 per share, then your gains in the next 12 months will be even higher than 30%. So set some price alerts on Netflix stock around $500, 515, 450, 475. These are all good price targets, in my personal opinion, to be buying Netflix stock at and then selling around $650 per share. So smash a big thumbs up on this video if you learned anything, or if you just appreciate the content. It really goes a long way. And if you want to join my close friends list, my private trading group where we trade a lot of options, do a lot of option trades, I post strike prices, expiration dates, and everything in between. We've had a long list of success stories now, over 1,500 positive testimonials in the past week, up 39%, $750. And you can see, thank you, the daily stock market. Almost time for my weekly withdrawal of my account. DM me to join, a 45% gain. And the list goes on and on. So go through the Success 2024 on your own time. When you have about 15 minutes, read through some of these amazing calls. The daily stock market up 166%. $440 made at the bottom, 166% gains overnight. It only takes a few minutes of your time, and now is the time you definitely want to be involved in the stock market. Everyone's making a lot of money. The markets are very predictable right now, and it's a great time to learn a new passive income skill, a high success specialty skill that could develop you into a money-making machine. And the good thing is, beginners are welcome. I've taught thousands of beginners from knowing absolutely zero to becoming an advanced trader in just a few weeks. You also just follow what I post, what I buy, and when I sell. You get alerts exactly when to buy and when to sell, so we take all the stress of that away. Just message me here, the daily stock market. Thank you guys for making it to the very end of the video. Make sure you're subscribed on YouTube if you're not, because around 25% of people who watch these videos are not subscribed. So let's change that. Thank you guys. I'll see you in the next video. Remember, don't time the market, buy the market.